Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis, and today we are going to be talking about Ripple and XRP, so sit back, relax, and before we fully jump on into this video, I do just want to ask guys, please leave a like on this video. It does help the channel grow immensely, and of course I always do greatly appreciate that. Now with that being said, of course I'm not going to be talking too much about Bitcoin's price, XRP's price, or anything like that. I'm going to be talking to you guys about a lot of things within this market that we should be focusing on as well. Currently, right now, the major indices are closed until Monday, but I will say this, when we are talking about the Dow Jones, looks extremely bullish on the 1 week. I've addressed this in my video from yesterday, or Friday, I should say, when I was talking to you guys about how the indices looked very strong, the dollar looked pretty weak, and it looks like we are going to be seeing that massive rally across the board for crypto. Right now, I'm focused on Bitcoin, and I know that sounds crazy to say, but I believe that we have a Bitcoin season to go through before we do see that alt season, really be ushered in. I believe that we are still in that 2017-2018 structure where we will see a massive bull run around the fall to winter timeframe yet again. But all while we are watching that, I'm also watching one massive thing. Okay? And that is the Dow Jones topping point. Now, I've always said between 40 to 45K will be the topping point for the Dow Jones. Now, you guys do see the fib outreaches here, going as high as like 167,000. Don't look at those fib outreaches too much because it's just not economically viable. I will say this, the reason why I do believe that 40 to 45,000 is the topping point is because cracks are emerging throughout this entire market. More so, the 2008 financial crisis was all dependent on the banks failing. We are seeing banks currently, right now, struggling. We are also seeing SWIFT, the network, the payment network that we run on day in and day out, collapsing before our eyes. These nations are pulling out of it. These areas around the world do not want to be under the US dominated currency anymore. And this is what is calling for concerns within, of course, finance in general with stocks. The Dow Jones will see a massive collapse. I've said this multiple times. Everyone can see this. If you do the research, you could understand this as well. Go through, some technical analysis that are watching the Dow Jones. The picture is being printed for us. Similar to this structure that we are currently in, it's very similar to major points back in 2008 before we seen the topping point officially for the Dow Jones. I believe that we are somewhere within this range back here where we had this massive collapse in the Dow Jones, for an example, right? If we are looking at this back here during around roughly February of 2007 all the way to about March of 2007, this seen about a 6.7% drop in price. Not much at all. More so, I'm focused on the micro views of the Dow Jones as well, not the macro views. But if we are talking about the macro views, we will lead to, of course, a collapse throughout the market. Currently, this is about a 12.57 collapse, or I shouldn't say collapse, a correction, which we've seen before the collapse back in 2008, but this was a smaller scale. This was about 6.7%, which could possibly lead us to, the idea that we could be seeing a much bigger collapse within the Dow Jones. But even if we go back a little bit more in time to around the May timeframe of 2006, we've seen an 8% correction back here as well. The percentage figures are a little bit different compared to now. There's a lot more money within this market. There's a lot more money around the world currently as well. So, technically speaking, could a 12% drop be similar to those small figure drops back then? 100%. But I'm not focused on too much of this structure. I'm focused on what is happening within the banking scene that could lead to a repeat of 2008, which we are seeing that right now unfolding. In fact, we do see here breaking news, Deutsche Bank to set aside an extra $111 million for bad loans, cracks emerging. That would take provisions at Germany's largest tender to between 250 to 300 million euros. And, this could get very interesting very fast. And we also see here, Bill Gross warns Federal Reserve rates rises will crack the United States economy. Don't act surprised. And we, of course, see breaking news. India will study the impact of Western sanctions against Russia while devising a payment mechanism to settle its trade with Moscow. Getting very interesting. And, of course, this is talking about basically replacing SWIFT. And honestly, when we are talking about everything within this market, when we're talking about everything within finance and things like this, these confrontations really will ramp up, or I should say streamline the idea of adopting new age digital technology. And of course, when we're talking about payment mechanisms, will they utilize some sort of crypto tech? It's hard to say, but we know that they cannot get around sanctions. So they will most likely build out their own payment mechanism. Don't know how this is actually going to work. I'm just not, educated enough to really kind of see the bigger picture here on what they are trying to do, and I will completely admit that. We don't know what kind of technology that they're going to be doing, but we do know that down here, India covers only a fraction of its oil needs with imports from Russia and is exploring trade settlement mechanisms, including using Indian currency or rupee ruble system. Now, with this, we know that India has a lot of connections to crypto technology, but like I said, it's going to be hard for them to get around sanctions utilizing crypto technology. I know that Senator Warren thinks that it's very easy, but it's actually not that easy, especially even with crypto technology. Of course, with decentralization, could they utilize something like the XRP ledger? It is possible, but I just don't see that happening. So who knows what's going to happen with this? I can't speak too much on that, like I said. But when we are talking about everything that is happening within the banking scene, and we're talking about things with the SWIFT network, all of this leads me back to a possible massive repeat of 2008. But this time it will be a lot more. Like, here's a 54.69% correction back down to the support zone of course, March of 2020. That was the COVID collapse, but this is going off of 42,000 being the topping point on the Dow Jones, which I've always said between 40 and 45K is basically our topping point for the Dow Jones. Now, if we do see this massive correction, this will bring us into, of course, a bear market on the Dow Jones. I think that this is significant, but I honestly believe that we could be seeing a much greater percentage drop, more so being around like 70 to 80% of a correction. And I'm telling you guys, the reason why we are seeing this right now is because of everything happening within, of course, spending and things like that. I mean, over 40% of the US dollar in, circulation has been printed in just the last like year and a half alone. So, things are rapidly changing right now. And even when we are talking about things happening within the banking scene, we also know that a liquidity crisis was the result of 2008 as well. It was the main fuel that lit the flame. And when we are talking about liquidity, it comes to one major player, Ripple. As crypto moves towards mainstream adoption, businesses should invest in liquidity solutions that address customer needs. From 24/7 365 uptime to eliminating pre-funding requirements, Ripple Liquidity Hub will be that all-in-one solution. I've talked to you guys about this just recently. I mean, this is absolutely massive, especially for enterprises and even financial institutions that want to utilize this liquidity hub. I'm talking to you guys right now about liquidity. I've talked to you guys about liquidity yesterday as well, and I will continue to talk to you guys about liquidity because it is such a massive selling point for RippleNet and even XRP, because once you combine Ripple with on-demand liquidity, it is huge. The opportunity cost is absolutely massive as well. And when we are talking about everything leading us back to, of course, banks, here's SWIFT, breaking SWIFT alternative in plans. Russia, India exploring opening alternative payment channels amid sanctions. And this is, like I said, going back to this tweet here. We could actually kind of read more about this, but we are seeing, a lot of change within this area, more so focusing on, a unified payments interface with the faster payment system of the Bank of Russia to continue cross-border trade. It's all focused on one area, cross-border, trade, and we do see all these options are on the table and are being discussed by the two governments, the Reserve Bank of India and the Bank of Russia. And this is going to get very interesting because, again, this is all talking about SWIFT network. It's all talking about being cut off from it, but all these nations want out of, a U.S.-dominated market, or I shouldn't say market, but financial system anyways. So when we are talking about SWIFT, I believe its days are nearly numbered. I've been talking to you guys about this for a very long time, going back as far as like 2000. It was like 2021. It was like around like the beginning of 2021. But we even see, in cross-border payments, money has to move between nations and involves counterparty risk. Linking the fast payments network of two countries allows citizens of one nation to use their payment system in another country and vice versa. This is talking about a bridge between these payment mechanisms as well. And guys, things are getting very interesting because, a lot of these other nations are also seeing the major, change here as well, which is the idea of, Russia being, cut off from SWIFT causing massive financial problems. These nations also see that and want to get out of SWIFT because they don't want the same thing happening to them as well. This will cause a massive catalyst event. And we do see here one of Australia's major four banks openly states on its website it is partnering with Canada CIBC using Ripple's blockchain network technology. NAB forms International Bank Innovation Network. And Westpac, another one of the big four Australian banks, is not shy about informing the world on its own website that is involved with Ripple. Westpac is also involved with distributed ledger startup Ripple, which is building out a network to facilitate faster and cheaper cross-border payments, a blockchain alternative to the current system through global settlement engine SWIFT. And I want you guys to realize that these are all focusing on huge efficiency gains for the banks and for the whole financial system if blockchain-inspired technologies can deliver on the visions of companies such as R3. Things are rapidly changing within the banking scene. And I want you guys to all understand that this is confirmation that they are going to utilize Ripple technology at the end of the day. Even if they trial it, right? They're going to trial it, see the efficiencies of it, and then move towards utilizing this. In fact, this is already confirmed. Look at the efficiencies that have been confirmed by Ripple partners. Ripple partner takes on SWIFT with 90% cheaper solution for US brokers. Our new payment solution for financial institutions that send money to brokerages allows their retail customers to invest in US equities fast and simple. This is from Neum, right? The new solution, which leverages Ripple's blockchain network RippleNet, claims to lower settlement costs for financial institutions by up to 90% for international brokerage account transactions when compared to transactions settled via this SWIFT international payment system. Do you guys realize what is happening here? This is revolutionary technology. At Neum, we are constantly seeking to empower growing businesses with global reach to move money in smart, fast, and safe ways. Our new payment solution for financial institutions that send money to brokerages allow their retail customers to invest in U.S. equities fast and simple. This is huge. And of course, here's a breakdown of those savings and things like that. So cost savings of up to 90%. Again, improved customer satisfaction, decreasing friction associated with investing in the U.S. stock market for international investors, drives customer loyalty and brand affinity. And of course, increased demand for new partnerships by leveraging Neum's network to optimize payments to the U.S. brokerage accounts. Global financial institutions can reach new customers by taking advantage of Neum's low-cost transfers to drive new brokerage partnerships. This is massive. I do not need to tell you guys how major this is because it is already telling you guys. This is a global disruption of the SWIFT network. Things like this that are moving rapidly, that are being adopted rapidly, that are seeing the efficiencies and the overall cost basis. This is the cost breakdown of utilizing something like this. 90% savings, okay? Imagine that. Imagine spending $100 on a transaction when you could only spend $10 utilizing some sort of other network. I mean, it's a no-brainer situation. Imagine if somebody offered you the same exact thing at a 90% discount. Why wouldn't you choose, that specific seller, for an example? It is a no-brainer move, especially for these financial institutions. So at the end of the day, when we are talking about things happening, right? First off, this collapse that we're going to be seeing is going to be fueled by, of course, government spending, printing of massive amounts of money with little to no recognition at all of it. We've been seeing the Fed throwing the interest rates out the window for a very, very long time. Basically saying it's transitory, it's transitory, it's transitory. Things like this only lead to one major thing, okay? And that is going to be a massive emergent crash of banks. The banking system is going to repeat similar to 2008. I'm telling you guys. And when we're talking about inflation and things like that happening right now in the world, you guys can see it. I can see it. It sucks. I mean, gas by itself is just terrible in terms of the price of it. But I'm not even talking about grocery shopping, bills in general. Like, things are rapidly changing every single day. And we are seeing that massive, chaotic point in time where inflation is absolutely killing individuals that are not making enough money to really cover it. And it really does suck, but this is exactly what happened in 2008 as well. We are seeing a massive repeat of events. And I'm telling you guys, this is not sustainable at all. And when we are talking about the economy, I definitely do think that we are going to see a major move throughout the markets. I don't think that a crash is going to happen anytime soon. I mean, similar to 2008, it didn't really happen until we really seen a topping point for, of course, the Dow Jones. I don't believe that the topping point is just in yet. Of course, on the weekly charts, on the fib levels, you guys do see us ranging on some major support. I do believe that this support line will hold, and I do believe that we have one last all-time high left in store for the Dow Jones. But I'm telling you guys, 2023 is going to look very, very interesting, especially for finance and, of course, for the banking scene. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, I hope that you all have a beautiful day or beautiful night wherever you guys are in this beautiful world. It's been Nick. Peace out, guys.